Hello, everyone. This is Big Cheds. I'm coming to you on a Sunday, May 30th, 2021. This is episode 2 in a 50-part video series based on my best-selling book, Trading Wisdom, 50 Lessons Every Trader Should Know. You know, when I released the book, there was just a ton of support for an Audible version. And even though I don't have an Audible version yet, I am working on one. I thought it would be a good idea to record one chapter at a time and release it on YouTube. That way people can get a sense of what the book is about. If they can't afford the book, they can get that free content. And it also allows me the opportunity to explore, some of the topics in the book and kind of go into greater detail, and you get to hear them in my voice, which I think is pretty cool. The format is I'll be reading the book myself, and you can kind of go along from there. Just to remind you, you can find me. I'm on Twitter at Big Cheds. It's probably where I'm most well known. I do have a YouTube channel, Cheds Trading, and I'll have a playlist for these videos. So once I upload this video, it will be on that playlist. This week we are doing What's the Rush? Lesson 2. Last week was Lesson 1, Respect Your Funds. And next week, the lesson is Stay Calm Under Pressure. So that will be a lot of fun. You can find my book on Twitter right now. My book on Amazon right now. It's been doing very well. The reviews are great. People say that they're connecting with the book and it's making a difference. And that's awesome. That means a lot to me. So definitely thank you for that. I want to say that. I appreciate your support. It's actually my second book. I was diagnosed with cancer back in 2017, and I wrote about that experience, my battles with cancer, a patient and caregiver's candid memoir. You can check that out, also available on Amazon right now. And if you're interested in technical analysis and learning how to trade, definitely recommend you check out Bitcoin Live, where I'm a founding analyst, and it's the best-in-class educational platform for crypto. I'm very proud of that. So I definitely encourage you to check that out. But for now, let's just jump right into the book and we'll get things started. Trading Wisdom, 50 Lessons Every Trader Should Know by Cheds. I'm going to read the introduction sections each time because I don't know how many videos people are watching. These things, once I have them all out, these things will just be popping up as suggested videos. So I want people to to have a sense of what they're looking at so they can understand, or rather what they're listening to. About the author. I love trading and have been doing it for many years. My formal training is with Japanese candlesticks and classical charting, and I'm certified as a CMT, or Chartered Market Technician, Level 1. My educational background in psychology and brief career as an amateur poker player also guide my approach, paying proper respect to risk management and the study of one's opponent. On Twitter is where I am most well known and can be found at Big Cheds. I am also a proud founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. This is my second book. My first published work was a memoir titled My Battles with Cancer, a candid patient and caregiver's memoir. Introduction. My early days of trading were filled with frustration, confusion, and constant losses. After making some of the same mistakes over and over, I began to adapt and learned a few tricks to minimize my losses. As I began passing these tricks on to my fellow traders through my Twitter account and learning blog, chedstrading.blogspot.com, it launched me on a path of learning and teaching. With enough time, that path led to dedicated studies of Japanese candlesticks and classical charting, and eventually CMT certification. My career and brand have been built on helping new traders avoid my old mistakes, my tagline, and this book is a natural extension of those efforts. This book is also a natural extension of my Complete Beginner's Guide to Trading that I wrote back in 2017 when I was undergoing chemotherapy for lymphoma. I subsequently beat my cancer and wrote a book about that experience and have continued to grow and have since continued to grow in my journey as a trader and teacher. Building on my years of work with my Twitter account, learning blog, and various other writings and tradings on trading subjects, I am happy to now bring together in one place all those bits and pieces that have helped to make me a successful trader. I have personally made every single mistake mentioned in this book multiple times, and therefore can speak from the heart, which I hope makes each lesson a little bit easier to learn. Thank you for reading, and best of luck in your trading journey. And now we'll jump right into it. As I mentioned last week, we did Lesson 1, Respect Your Funds. Lesson 2 this week, What's the Rush? And Lesson 3, next time, stay calm under pressure. As always, we're going to begin the chapter out with a quote. Quote, "If you are in a rush to trade, do not be surprised if your money is in a rush to go somewhere else." Continuing with the book, "Every trade you execute should be well thought out ahead of time. Putting your money to work and risking capital loss is a serious thing and should only be done with a clear plan in mind. That plan should include a trading thesis and stop loss." So let's focus on that. Putting your money to work and risking capital loss. Focus on that. You're risking capital loss. Every time you open up a trade, every time you hit that buy button, every time you enter the trade, you're risking losing that money. That's capital loss, and that's something you should take seriously. You shouldn't just be casual about it. And we talked about that last week, respecting your funds. And a lot of these lessons tie in together. But when you're risking capital loss, you should only be doing it because you think there's a good opportunity. And how do you define that opportunity? You define that opportunity with a trading thesis. A thesis is it's your trade idea. It's the reason you entered the trade, because you broke through resistance, or because you bounced off of support, or because some type of a continuation pattern, like an ascending triangle completed, and you think it's going to make that measured move. That's your thesis. And if your thesis fails, that's what the stop loss is there for. The stop loss is your invalidation point when that trading thesis fails. So when you're going to risk capital loss, don't be casual about it. You're risking capital loss, capital destruction. You should only do it with a trading thesis and stop loss. Back to the book. When you rush in to your trades, you are prone to making simple mistakes. How often have you entered a long position and smiled as the price went up, only to find out you hit the wrong button and went short? How many times have you entered a trade and bought far more or far less than you intended by mistake? Going too fast and clicking the wrong button can lead to disaster. So always take a deep breath and go slow when you enter a trade. So it still happens to me, unfortunately, once in a while. Unfortunately, it still happens, and it only happens once in a while. That's where I go too fast. We all have, whether you're on your phone, you're on the tablet, you're on a computer, when you're entering a trade, you're putting in the symbol, you're putting in your limit price, you're putting in kind of, exactly how much you want to buy. There's all these fields that you have to enter. And if you go too fast, it's really easy to make a mistake. And, most of these have like a, click here to preview order or click here to confirm. You often do get that chance to review it, but, as traders, sometimes we're impulsive. We just hit click, click, click. I want to get in. Let me get into this trade. Let me get in real quick. And you hit the button and you go too fast. You think you went long, but you hit the short button. You went short. Or you think you bought, 5 shares or 5 coins or whatever, and you bought 50. You bought 500. You bought way more than you intended. And those errors can cascade. They can lead to further capital loss. Like you don't go fast. Like, what's the rush? You need to slow down, take a deep breath, and every single time you enter your order, every single time you submit your order, double, triple check it. Just make sure it's right, because you got to respect your money. We talked about that last time, and you gotta slow down and not rush through. Back to the book, quote, most of the time in these bottoming situations, I lose money when I fool around throwing in bids before any type of bottoming pattern has even started to form. Wait for things to settle down and identify a solid idea that you can use as your fail point. So I'll show you what I mean on the chart here. Just to get a sense of what I'm talking about, we'll pull up Bitcoin. I was kind of scrolling back in time. And so on any volatile asset, or really any asset, doesn't matter what you're trading. I trade many different asset classes. If you're trying to play a bottom, it's really tempting to jump in and try to guess where that bottom is. And as the price is coming down, maybe on this candle, we get all this volatility and volume, it's bouncing up, but you're so early, you're putting in bids. And you want to wait. Obviously, in this situation, you can see the price was doing a bearish continuation. And so, but you're still trying to play it because you think it's oversold because 15-minute RSI, or because your friends tell you it's going to bounce. Like, don't rush, sit and wait. Like, these bottoms are most of the time, they form a lot slower than we think. And I still do this, and I still struggle with this, where I know the bottom is coming. And you'll see this in the book. I mentioned this. I feel like I just know the bottom is coming, and so I keep throwing in bids, but I'm too early, and I just get chopped, and it's just like chop, chop, chop. You're chipping away at your trading account, and it's just like a bad situation to be in. And you could have waited a little bit, and maybe you played like a lower low here, and you're looking for some type of inverted head and shoulders. But really, you got an even better. The reason I picked this one is you got an even better setup here, because you got kind of the retest, right? And I have a whole chapter. I don't know the name of the chapter just off the top of my head, but let's see. Talk about picking your spots carefully. You wait for that retest. A lot of times the best entries come on a retest of support. So you try to establish a low, it bounces a little bit and it fades, right? You see this all the time, and then you wait for that retest. And a lot of the time, like here, you get that double bottom with the slightly lower low where you sweep the stop losses. You could have bought here in the retest, or you could have even, if you're conservative, you're patient enough, you could have waited here for some type of a diagonal break, right? Or you could have waited here for the price to break up above that horizontal. So this was a pretty slow bottoming setup here, and you can see the price did really well. Went from like 47, up to 58. You had a really nice bounce. So if you try to mess around in here, you just get chopped. So you want to avoid, if possible, rushing into these bottoming situations. And that's one way I personally get into a lot of trouble, is by rushing in before like the bottom has really started to form. Back to the book. I have found that it is difficult to stay away from trading when I think something is in the process of bottoming. When this happens, an incredible urge to jump into the action comes over me, right? Incredible urge. You're just like, I feel it is coming. Since I do not want to miss that perfect entry, I scale into every minor bottoming formation I see, only to get stopped out minutes later, right? Think about that. There is no perfect entry, right? That's a myth. But while you're in the moment, you're just like tempted to, maybe I can nail it this time. Maybe I can nail it this time. And every time you get a minor bottoming formation, some type of 5-minute, a 15-minute little, some type of inverted head and shoulders, or some type of a small bottoming formation, you're like, that's it. But those are weak signals. We know that those lower time frame signals are less reliable. We're waiting for larger time frame reversals because we're students of technical analysis. But like I said, I still struggle with this I still struggle with this after all these years. So back to the book. This happens over and over, when in the end, if I had just waited for a while, I could have played a clear bottom forming pattern when the price action offered a more clear signal. More often than not, the bottom is slow to form, so there is plenty of time to jump in on a support retest. I showed you that. Diagonal break, I showed you that, or horizontal break, right? I just showed you that with that situation with Bitcoin. where if you'd waited, you got that support retest, and then or there's a diagonal, or you could have played the horizontal. All three of those are reasonable trading theses upon which you could have placed your stop loss and kind of formed your trade idea. Back to the book. My best advice is to follow momentum. Don't be fancy and try to anticipate when it is going to turn around. So a lot of the times we try to anticipate when it's going to turn around. And, the RSI is over 70. I'm sure it's going to pull back soon. And we get into the mode where we're trying to think ahead of the price. We're trying to anticipate what the price is doing, when in reality, we should be observing the trend and looking for signs of weakening, right? You want to stay connected to the price action and what it's doing now, rather than trying to think about what it might do, what you think you feel maybe it might do, in a few days, a few hours, in a week. You got to focus on what's going on, stay connected to the price action, and follow the momentum. Don't be fancy and try to anticipate when it's going to turn around, right? It's super bearish. It keeps going down. You think it's going to bounce. Wait till the price is showing you weakening bear momentum. Wait till the price is giving you a lower high break, something you can work with, right? You have to let the price guide you. Back to the book. Momentum has a way of making itself clear if you are willing to be observant and look for clues in the price action about when the trend is changing. Traders talk about, quote unquote, catching falling knives, referring to this process of anticipating a bottom before it has formed. Messing around and trying to catch falling knives will shred your bankroll unless you are a pro, right? That's the thing, right? It's a falling knife. It's going down fast. It's tempting to try to jump in and catch that perfect bottom. Let the price stabilize. The bottom will form. It's going to give you a better, more clear entry. Be patient. All right? Back to the book. Quote, if you are going to throw some serious funds at something, and this is another way to rush in. Quote, if you're going to throw some serious funds at something, at least do yourself a favor and look at the chart first. Another way of rushing into a trade is buying without even looking at the chart. Sometimes you see an idea in a chat room or news article that catches your attention and makes you feel the instant need to open a new position. No matter what, you should look at the chart and try to understand the direction of the trend, as well as where you are buying in relation to major support and resistance, right? That's just like a trading sin. I can't even wrap my head around it. I've done it. But I haven't done this in forever. This is when I first started. But buying without looking at the chart, that's insane to me. You have to understand where you are buying in relation to major support and major resistance. And the price tends to, very often the price will trade in a channel, a well-defined channel, upper boundary, a lower boundary. You want to understand where you're buying in relation to a trading channel, in relation to being overbought and being oversold, the direction of the trend, how strong it is. So you have to, what's the rush, right? You're going to be setting yourself up for disaster. You buy without looking at the chart. All of a sudden, you bought the top of the pump. Now you're down 30% and you throw up your hands and you say, I guess now I'm a holder. Don't do that. Don't just jump in and be I'll just keep holding. No. Be disciplined, enter for a reason, stick to your stop loss, always look at the chart. Back to the book. Buying blindly, that's what that is. Buying blindly leads to playing from behind, with one mistake leading to another, and all of a sudden you have a big problem on your hands. And I end the chapter, quote, remember folks, it's a marathon, not a sprint. So pace yourself, right? Chapter 2. It's a marathon, right? So if you rush in, you're gonna make mistakes. It's gonna lead to more mistakes, and those mistakes will chip away at your bankroll. And in order to survive, in order to complete the marathon in this example, you have to still be around. You still have to have trading capital. You have to, and that happens because you've preserved your capital. You've defined your risk. You've waited for opportunity. So, what's the rush, right? Don't rush in. be methodical, be careful, and hopefully that helps. That is chapter 2. This is video lesson 2. What's the rush? Just kind of as a reminder, this is from my best-selling book on Amazon right now, Trading Wisdom: 50 Lessons Every Trader Should Know. You can think about this book as 1/3 trading psychology, 1/3 risk management, and 1/3 technical analysis. The feedback has been just amazing. People say that it's just easy to relate to. They've made all the mistakes in the book. It's really helped them think about how they're approaching their trading. And I think that's awesome. I mean, the book is done way better than I thought it ever would, and it's really connecting with people. And there was just a lot of demand, like I said earlier, for an audible version. I don't have that yet. And there's also demand for other languages and all sorts of stuff. But I thought, it'd be a good idea. Why don't I release one chapter at a time on YouTube? That's what I'm doing now. Gives something for people to look at. And there's even countries, where you can't access the book, where Amazon doesn't ship to, where you can't do Kindle. So there's many reasons to do this. This is episode 2 of the 50-part video series. I will have this uploaded. It will be on this playlist. I am, of course, Big Cheds on Twitter, Cheds Trading on YouTube. My book is available, as I mentioned now, probably 100 times on Amazon, Trading Wisdom. My first book, a memoir on cancer, my battles with cancer, a patient and caregiver's candid memoir, that's also available on YouTube, on Amazon, if you are interested in that. And if you're interested in learning and technical analysis, definitely encourage you to check out Bitcoin Live, where I'm a founding analyst. I'm extremely proud of my involvement with that project. We just have a great team, and that's something I would encourage you to check out. But until we talk next, I hope everyone is doing well. It has been my pleasure to talk with you today, and we'll talk again soon. All right? Big Cheds out.